Yeah, so today's a very interesting day. Everyone's favorite financial literacy YouTuber, Meet Kevin, also known as YouTuber's car salesman because he just has that cringy car salesman personality. I don't know what it is, but he used to not be like that. Now, every time he speaks, I feel like he's trying to sell me something.
Holy smokes, I may have found a way to potentially never pay taxes even though I will be trading stocks.
And today, he dropped a video and he is selling something. He's selling his very own ETF that's on the stock market exchange. That happened, so let's dive into it. What's up, everyone? My name is Mark. Welcome to Trading with the Dummy. If you haven't done so yet, and if you're brand new, please click the subscribe button. It will really help me out. And of course, watch my videos all the way through the end and give me a thumbs up if you enjoyed it. So today we're going to review Meet Kevin's ETF. Now, just to be very clear, I have like a love and hate relationship for him. I know a lot of people hate him, a lot of people love him. So I'm gonna approach this in an objective way. So I'm not gonna judge the ETF based off of the character that I see on YouTube. I am gonna judge it by the stuff that I see within the portfolio and the little bit of information I gather by reading through some of the documentations on sec.gov, as well as on his website and Seeking Alpha. So I'm gonna jump onto my computer and we're gonna go through this together, and then at the end, let me know if this is something that you're gonna invest into. All right, so without further ado, let's cut over to my computer. All right, so the first thing I like to always look at is the Form N1A, which was filed with the Securities and Exchange Commission. Now, what you will see here real quickly is that when you look through this, that it is Meet Kevin's actual ETF. He is the active manager. Now, the advisors and et cetera are other people. It was, I believe it was Torso. I think that's how you call, or I think this was called, it was Torso. Torso Investment LLC serves as the investment advisor to the fund. And then they have a sub-advisor, which is Plato's Philosophy LLC, serves as an investment sub-advisory to the fund. I suggest you guys actually look up and see what these companies are all about, what they've done in the past, and see if they even have any experience in actually running a fund. But Kevin Prafrath, I think that's how you say his name, is basically the portfolio manager. And he's going to be an active portfolio manager, meaning he's going to buy, sell, and trade within this fund. It's important that you look through all of this because they also have some risk factors in here also that you need to look into. They don't exactly tell you what they're investing into. It does show that it looks like it's going to be heavily in certain sectors, is what I saw in here as well, which is not good. It's not going to be extremely diverse. It looks like it's going to be heavily catered towards the tech sector. So you're not getting anything like Berkshire Hathaway or anything like that. You're going to get something that's probably very close to ARKK or somewhat. But anyways, look through this. You can go to sec.gov and get all this information and just read through it, literally read through. I do this with every single company, especially the risk. You want to see what the underlying ETF risks are, like technology sector risks. He even talks about this right now, that it looks like he's going to probably put a lot of money into tech, and then, portfolio holding information. So basically information about each fund daily portfolio holding will be available on the fund's website. So a complete description of the fund policies and procedures with respect to the disclosure of the fund portfolio holding is available in the fund statement. Okay, so this is going to be on his website. We're going to go over there and see exactly what he has invested within this portfolio. If you also scroll all the way down on this, you'll see how much the folks paid or are going to get paid within this fund initially. Let me go all the way down. I think I saw it earlier. Where is it at? Okay, here you go. Estimate total compensation from the fund complex paid to trustees. It looks like this guy named Javier, Michelle, and David. So they're gonna get around $27,000 estimate total compensation from the fund complex paid to trustees. All right. So just kind of, and also look at like the voting policies on here as well. So there's a lot of stuff to look through before you guys actually start investing into this new ETF. This is like any IPO. You want to kind of be careful. You don't want to buy right on the beginning, because I'm telling you, most of the time the stuff usually ends up going down. Now, if you go to Seeking Alpha, had a quick little article on the ETF tied to YouTube. Kevin Prafrath set to hit the market. All right, a new ETF tied to YouTuber Kevin Prafrath. I don't even know if I'm saying his name right, is set to come to the market on Tuesday, part of the recent trend of personality-centered investment vehicles, very much like Jim Cramer. According to Bloomberg ETF analyst Henry Jim, the Meet Kevin Pricing Power ETF is set to come to the market on November 29th. The investment vehicle is tied to Kevin Paffrath, an internet personality focused on real estate sector known as a landlord influencer. He's mostly known as a person who buys a bunch of really crappy stocks and growth stocks in 2020 that ran up like crazy and has crashed since. He doesn't really focus so much on real estate anymore. I mean, I know he's doing his house hack stuff, but for the past 2 years or so, he's been heavily in the stock market. So it looks like, there you go, Torso Investments, in partnership with Paffrath, had filed a registration statement in August with the U.S. Secretary and Exchange Commission to launch 3 ETFs. So that's when I was just talking about the what was it again, the 1N. Was it 1NF? I can't never remember off the top of my head. Form N1A. That's the form that they're talking about. Toroso Investment, in partnership with Paffrath, had filed. Okay. So the Meet Kevin Pricing Power ETF will focus on long-term capital appreciation. The actively managed ETF seeks to achieve its investment objective by investing primarily in U.S.-listed equity securities of companies it deems as innovative and possessing relative pricing power to its competitors. Again, innovative and possessing relative pricing power to its competitors. What does that sound like to y'all? I'm just being real right now. Think about that. What does that sound like? That literally sounds like ARKK. And we've seen what happened with ARKK. It's an innovative stock that was relatively flat for many years. 2020 happened and it skyrocketed like crazy. Everyone thought Kathy Wood was a genius, and it's been selling off ever since 2021. And it's sitting, I think, maybe at $40 or $50 these days. It used to be close to 200, maybe even more, I believe. I don't recall. But be careful with these innovative stocks, because that basically means I am gambling. I'm gambling. A lot of these innovative stocks aren't even profitable companies within there, so you have to be careful. But I want to see what's actually in the ETF. Now, according to the SEC filing, the ETF will have an expense ratio of 0.77%. That's actually a lot, y'all, because let me show you real quick. That's a lot. Let me go over here again to the main screen. Just to give you an idea of like VOO ETF and its expense ratio. You can see, there's a show in here. I think it shows its expense ratio. Where does it show? I usually always go to ETF.com. Let me go to ETF.com. I know how to find it there. So if you type in VOO, for example, you'll see that its expense ratio is 0.03%. Okay, so this is an ETF that follows the S&P 500. The other popular one that everyone likes, which is VTI, I think they're pretty much almost the same. I know there's a minor difference, obviously, but they're very similar. And I think the expense ratio is also very same. Yep, it's also 0.03%. Again, his is 0.77%. That's a little over 3/4. Let's look what ARKK is, because I'm curious at this point what their expense ratio is in this sector. And it's 0.75%. So it's actually 2%. I mean, it's actually 0.2% higher than ARKK, which is also a pretty high expense ratio. So you keep that in mind, all right? So that is pretty high. The ETF plans to allocate 70 to 100% of its portfolio to investments in a selected group of companies, with up to 30% potentially used to purchase securities targeted ETFs to provide a macroeconomic hedge against the anticipated market risks. Again, 70 to 100%, with only a potential chance of using 30% to hedge. That sounds a little bit dangerous to me, to be honest. So, and the fact that it's saying potentially, which means it's not guaranteed, potentially. So most hedge funds actually have a certain amount allocated towards hedging to offset any possible massive dips or economic issues that will occur. But the fact that he's saying potentially, that's really weird. All right, so let's look at the stock's performance today. So it launched today at, looks like around $20. and it actually sold off 0.50%, so 0.5%. But then he dropped his video, and look at that. Look at a massive pump and dump right now. I'm not saying it's going to be a pump and dump. I'm just saying it's over 38% after hours. That's insane. 38% after hours. He dropped a video. It looks like a lot of people are not buying into this fund, or he just dropped a bunch of money in there, pumping it to make it seem like it's worth a lot more. So right now it closed at $19.88, and after hours is $27.55. To be honest, this would have been a great trade. So yeah, that's so the low for the day was 1973, 52-week low, which again, today is the first day. Let's go over to the actual website that he's created to show you what's actually within this fund. So the Meet Kevin Pricing Power ETF. All right, let's scroll down again. Man, that's a high ratio, dude. That's really high. It kind of gives you a rundown of, what the company's planning on doing. Innovative companies. See, innovative companies. Be careful with those innovative companies. That's very, very risky. Remember, those are pretty much growth stocks a lot of times. So, Meet Kevin Purchasing Power ETF. Meet Kevin Purchasing Power ETF. So I got three different funds, I think they said. So there you go. Here's the top holdings right now. What does he have most of his shares in? Let's put it in order. All right, so most of his shares are in a company called Embraer. I don't even know what that is. Let me go look that up real quick. It's ERJ. Never heard of it before. That could just be me. Let's see what that one is going for. $10.25. Year to date, down 42%. Within a year, 25%. 5-year. Oh wow, 5-year return, it's 45% down. So that's his biggest holding. Then UDN, let's go look up what UDN is. Some of these that don't ring a bell for me, so. UDN, that's the ETF. Invesco DB US Dollar Index Bearish Fund. Oh, okay, the dollar bearish fund, thinking that the dollar is basically going to lose some value. The high was $20.45. The 52-week low was $16.75. So, okay, so I'm guessing that's probably his hedge that he has in there. That's the second biggest holding. Next is UTWO, then cash, then Tesla. All right, the next biggest holding is Tesla. But let me look at this UTWO is as well. It's a treasury, clearly, 2-year treasury. But let me see where that's at right now. Okay, 2-year treasury note. Okay, ETF. I didn't even know that existed. See, just learned something new. Year to date down only 1.75%. Not bad. So that must be the hedge, both the dollar and the 2-year treasury. And then obviously he has cash. So shares. All right, Tesla is the next one. Clearly, we already know he's a Tesla fan. So next is Trade Desk. Trade Desk. I used to love Trade Desk, but it's a advertising company. We've already seen how that's worked out for Snap, Facebook, and all these other advertising companies. I used to love this company for real. Like I loved it. Year to date is actually down like 45% as well, 46%. So he's got that is the basically out of the shares alone, that is his third biggest holding. Apple, okay, makes sense. TSM, I'm assuming he bought that because Buffett bought it. Oxy, I'm assuming he also bought that because Buffett bought it. AMD, he's heavy in AMD. AMD's down right now. I still think it's going to go to 50s again. Let's see where it's at today. But that's also sold off significantly in the past year. Oh, it was actually up today. In the past year, though, it's been down 53%. And what else? Is that it? Okay. There's more. How do I scroll down on this damn thing? So you got some other stuff in here too. I guess I can't scroll down. That's weird. So I can scroll over, but I can't scroll down. Dude, you gotta fix your website.
Because you trying to give me advice about something. You ain't got the answer. You ain't spent $13 million of your own money trying to empower yourself.
Yep. but it looks like he's got some other stuff in there. NVIDIA is also in there. Cloudflare is also in there. So as you can see, yep, a lot of innovative stocks, a lot of tech stocks. What else? CrowdStrike. Ooh, he just bought CrowdStrike. Is down significantly today. Significantly. He's got Autodesk. I like Autodesk. That's actually a good one. They have a monopoly. Etsy is also down. Enphase, of course, that was like the one that performed the best for me. Only 72 shares of Enphase. CrowdStrike only 36 shares. Sunrun 2 shares. So interesting. Okay. Yep. So the one with the, you can't even do this either on here. You can't go by weighted. Yep. So market value, the highest one is market value is Tesla, then Apple, then the UTWO, TSM, TTD, UDN, Enphase, AMD, Lululemon. All right, so you have an idea what he has within his portfolio. Pretty much all the popular stocks. I mean, I don't except the ones that he's hedging. So most of them are just popular stocks you've heard before. Most of them are down significantly, over 50% 40 to 50% down. If the market turns around, I'm sure he'll make some money off of these. But would I buy that right now? Would I buy into this fund right now, especially at the fact that he just ran up 38%? That's insane. No, I would not. Best believe it's going to come down at one point or another. It may run because it's hyped up right now. See, clearly people love Meet Kevin, the fact that they pouring this much in there, or he's been pouring money in there, one or the other. Someone's pouring a lot of money into this fund. They could give it a perception that there's a pump in them, then people start buying in, then he may sell off some, who knows. Just be careful with any of these IPOs, especially in today's environment. The macro and the micros are not looking good, and a lot of stocks that he has in there, I still believe, have some ways to go down. I'm surprised he's not mostly cash, and it just seems like he's buying a lot of stuff at the wrong time. To be honest, at the wrong time. Tesla's in there again. You guys already know I think Tesla's going to go below $100 next year. By the end of this year, I expect it to probably be at the 165 or so. Who knows? I think it's at 180 something today. But yeah, just kind of give you guys a quick rundown on Kevin's new ETF called PP. Ticker symbol PP. Check it out. Let me know what you think. Are you going to invest into it? I know myself, I am not going to invest into it, not because of how I feel about the guy, but just because I'm not going to invest into celebrity ETFs. Just going to be honest. And the fact that it's an innovative stock, it just reminds me of the Cathie Wood ARKK, and I already have a bad taste in my mouth with that. So until next time, y'all, peace out.